Welcome everyone to this comprehensive TikTok discussion about Amazon stocks and why they could potentially be an excellent investment choice in 2026. We will begin by looking at Amazon's performance in 2025 against the backdrop of a volatile market. Despite the precarious situation, Amazon managed to maintain its top-tier standing in e-commerce and cloud services. The company declared record-breaking revenues, primarily propelled by its Amazon Web Services (AWS) segment, which continues to be a foundation of its growth. Analysts are sanguine about Amazon's potential for 2026. For instance, Morgan Stanley has increased its price target for Amazon shares to $315, foreseeing a whopping 40% plus upside potential. This optimistic outlook is underpinned by the ongoing growth of AWS and the expansion of artificial intelligence, two areas in which Amazon is making substantial investments. Beyond prognostications, Amazon has made public its significant investments in artificial intelligence infrastructure, with plans to allocate up to $50 billion to expand its services in this sphere. This strategic move not only bolsters its position in the market but also creates fresh income avenues. In summary, Amazon's robust performance in 2025, combined with its strategic investments and promising projections for 2026, make its shares an enticing choice for investors seeking growth and stability. Always remember to conduct thorough research before investing. For a deeper understanding, let's dissect the nucleus of Amazon's attractiveness as a stock investment. Amazon, a sterling equity in the U.S. marketplace, currently trades at $239.30, representing a minor fluctuation of 0.01% from the previous close. The most recent trading revealed an opening price of $239.97, with an intraday volume of 46,559,598. The intraday high was pegged at $243.29, while the intraday low stood at $237.83. The market transaction took place on January 30th. Investing in Amazon is an opportunity to own a piece of a company constantly innovating and disrupting traditional business models. While the stock may seem expensive, share price can be misleading. The intrinsic value of Amazon, which includes its prominent position in multiple sectors, can potentially outstrip the prevailing market value. One of the reasons why analysts remain bullish on Amazon is the company's relentless expansion and continuous top-line growth. Contemporaries have failed to match Amazon's consistent performance, making it a considerable contender for sustained investment. Moreover, Amazon's ongoing investments in high-potential areas like artificial intelligence, cloud computing, and logistics hint at its broadened revenue horizons. These strategic investments are not short-term game changers, they are poised to pave the way towards definitive transformation and growth over the long haul. Another aspect that merits attention is Amazon's resilience in harsh market conditions. Historically, the company has managed to weather economic downturns, outperforming competitors and maintaining its growth trajectory. This robust track record implicitly offers some defense against market volatility. Looking ahead at the trends and prospects, experts point to Amazon's capacity for consistent, high growth. Coupled with its proven ability to generate and scale new revenue streams, Amazon emerges as a strong long-term contender for investor funds. The upshot is that 2026 could probably be another landmark year for Amazon, marked by significant milestones. The e-commerce titan's probable success in the coming year makes its stocks an attractive prospect for those seeking viable long-term investment opportunities. However, it is important to consider the potential risks of investing in Amazon stock. Audacious valuations, potential regulatory hurdles, and the inherent unpredictability of the market are significant risk factors, which should not be taken lightly. Ultimately, the decision to invest in Amazon stocks rests on an investor's appetite for risk and their long-term strategic investment initiatives. Amazon's continued dominance across market sectors and its strategic investments underscore its potential for maintaining long-term growth and continuing its stock market outperformance. However, as always in the world of investing, one should perform thorough due diligence and research before making any investment. The stock market can be extremely unpredictable, and it's important to remember that past performance is not always indicative of future results. Each investor must assess their unique financial position and risk tolerance before making any investment decisions. From the investor's point of view, fairness and confidence in a company's management team are imperative. Amazon scores well on both fronts. The company has a proven track record of delivering results and an impressive history of pulling off transformative initiatives. Chief among the company's strengths is the vision of its founder and CEO, Jeff Bezos. His relentless focus on customer satisfaction, continuous innovation, and long-term business success have helped shape Amazon's distinctive company culture and approach, yielding notable results in the marketplace and stock market. Bezos' departure from the CEO position to Andy Jassy, a stalwart who has played a key role in developing AWS, did not affect the company's ascendancy. Even under the new leadership, Amazon continues to showcase robust growth and bolsters its position in the tech market. This succession event exhibits Amazon's depth in the bench and its statutory resilience. A seismic shift took place when Amazon, primarily an online e-commerce player, jumped into an entirely new business, cloud computing, in 2006. The blinkered naysayers might have scoffed at the audacity of the move, but today, no one can deny the enormous success of Amazon Web Services, AWS. This bold leap represents Amazon's openness to venture into untapped potentials. By acquiring organic co-created businesses such as PillPack, Zappos, Ring, Whole Foods, and others, Amazon has continuously expanded its offerings. It is a deft handler in identifying opportunities, leveraging synergies, and generating incremental value for its stakeholders, showcasing its ability to remain agile and adaptable. Amazon's Prime membership is not just about free shipping. The company has engineered the program to become an integral part of its ecosystem. This loyalty program has evolved into a robust retention and growth strategy, subliminally increasing customer spending and enhancing stickiness. Moreover, Amazon exudes innovative brilliance in its forward-looking initiatives, from drone deliveries to sustainable packaging. These projects are not only reshaping the retail landscape but also flash a signal that Amazon is a forward-thinking company, poised for future success. More than just an online retailer, Amazon has become synonymous with home entertainment through its subsidiary Amazon Prime Video. Similarly, it is shaping the future of consumer goods through initiatives like Amazon Dash, its voice-activated ordering system. Meanwhile, Amazon's foray into physical retail with the Amazon Go stores is revolutionizing the shopping experience. Amazon also stands as a beacon of sustainability, earnest in its commitment to becoming the most earth-friendly company on Earth. The company has pledged to reach the Paris Agreement 10 years ahead of schedule and become net zero carbon by 2040. It is pertinent to note that while Amazon's strategic moves have been generally forward-moving, they have not all been unmitigated successes. The success of Amazon's expansion and diversification strategy underscores the importance of risk-taking and adaptability in the world of business and investing. Having taken in all these complexities and considering all the compensations and the risk types, investing in Amazon stocks can conditionally be seen as holding a share in the ongoing journey of a company that has continually proven its transformative creativity and adaptability. As volatile as the market is, it's unwise for investors to hinge their investment strategies on short-term market fluctuations of a single stock. Diversification of the investment portfolio can play a significant role in managing risks and attaining reasonable returns. Hence, it's advisable to always blend Amazon equities with holdings from other promising sectors or economies to leverage broader growth potentials. In a world where fast-changing technology is transforming countless industries, it's crucial for investors to recognize the potentiality and value of stocks in these disruptive companies. Despite the uncertainties, investing in an innovative and futurist entity like Amazon presents numerous opportunities for the wise long-term investor. The performance projections for Amazon in 2026 suggest a continuation of the underlying current growth trends. The company's strategic advances within existing verticals and in nascent sectors augur well for a sustained upward trajectory. Additionally, Amazon's resounding success in its international business operations also presents a significant reason for optimism. Its global growth imperative continues to unlock promising long-term shareholder value. Remember, though the promise is enticing, not every investment will yield the expected return. The investment decision must align with your risk profile, investment horizon, investment goals, and other such considerations that are unique to you. Thus, it can be deduced that if you have the tolerance capacity for the associated risks and a long-term investment horizon, then Amazon stocks display a promising way for high potential returns. Keep abreast of the latest market trends and news, analyze multiple investment options, and make an informed decision.